volatility and uncertainty have been hallmarks over the past month of the market. The Trump administration has made trade policy a key priority. For more on how investors across the pond are navigating the current situation, I want to welcome in Richard Flynn, Managing Director, Charles Schwab UK. Richard, thank you so much for joining us this morning. So I want to get some perspective from you, especially when it comes to trade policy. We have a lot of leaders here, international leaders right now. How closely are UK investors paying attention to these trade policy talks and negotiations?
Very closely indeed. And good morning, Diane. Thank you for having me. Yeah, I think, every country in the world, investors all around the world are paying very close attention to what's happening out of Washington, both in the context of their own country's economies, but also really in regard to the US economy as well. The popularity of the US as a country in which to invest has grown significantly for international investors. And here in the UK, over the last 20 years, we've seen a real sea change where historically the previous generations would have had a significant home bias. They would generally tend to invest in their home country. And here in the UK, that would involve investing in FTSE listed stocks. Over the last couple of decades, that has changed quite significantly. And now most retail investors and most institutional investors certainly dominate their portfolios with US holdings, US assets. So it's not just the impact on the local economies or the local countries, as it were, but also the broader impact to the global economy, which is obviously dominated by the United States. Here in the UK is a service-led economy. So thankfully, in terms of the impact of tariffs, the initial announcements that were made by President Trump had the UK at a 10% tariff rate, which compared arguably pretty well with the rest of the EU, which was tagged with 20%. And that's just a consequence of the UK really not having a huge amount of goods export to the United States. So at the moment, I think Rachel Reeves, the Chancellor, is in Washington, and the UK is hoping to get a trade deal with the US. But as with every other country in the world, it's a little bit of wait and see at the moment.
Do you expect one to happen soon between the US and the UK?
I have absolutely no idea. We would certainly hope to have some element of certainty. I think both countries would benefit from that kind of certainty. But to be honest, the UK has been in a arguably a longer sense of uncertainty post-Brexit, which is next year it'll be 10 years since the Brexit referendum. So UK investors are used to having a little bit of an unclear path in front of them. There's probably a bit of frustration about that, but it's arguably also led UK investors to have more confidence in overseas markets. And that's why we see and have seen a significant increase in UK investors of all ages and all investment cohorts looking towards the US as the bulk of their investment strategies.
That has been the trend, right, as you mentioned, for some time now. But this year, the FTSE is outperforming the S&P 500. Do you think this is just a temporary blip, or what does that signal to you?
Yeah, I mean, I think it's a good question. What we look at really is investing in the long term. When we talk to our clients, we tend to obviously recommend diversification in terms of their market exposures, their asset classes, and crucially, their currencies. And, what we've seen recently is obviously a lot of volatility. The FTSE has had a relatively strong year. But looking at performance over the longer term, 10 years, 20 years plus, you can see obviously the US has been significantly outperforming not just the FTSE, but most global markets. We recommend to our clients not to make short-term decisions, to tend to keep the pace, to accept that there will be volatility, and to try and, ignore the noise or at least drown it out as best they can. Overall, if you consider the significant volumes of analysis and commentary that has been put around these tariffs over the last few weeks, fundamentally, the actual performance in over the last couple of weeks, while it's been volatile, has not been catastrophic for most investors if they've been diversified. So our strategy, our recommendations to clients around the world, not just in the UK, is to recognize that there will be periods of volatility such as this. They don't tend to last forever, and to keep a cool head when others around you are losing theirs.
And then here in the U.S., we've certainly seen the patterns with regard to flows into gold. How are UK investors positioning when it comes to gold?
Yeah, it's quite interesting, actually, Dan. We survey our UK clients, or sorry, not just our clients, but investors in general in the UK every January. And we've done that for the last 6 years. And one of the trends which we've noticed has been an increased confidence in gold. Our survey from January this year had gold significantly outperforming all other asset classes and markets in terms of anticipated returns by UK investors. 75% of UK investors that we surveyed in January felt that gold was either going to stay the same or increase in price. And that was, like I said, the asset class which had the most confidence in it. And obviously, clients who made that decision in January would be pretty well placed now. But as we always say, the best way to manage your portfolio is through diversification. There is a place for alternatives like precious metals. Obviously, right now, it's been a pretty good place to be for the last few weeks. And we continue to see demand for gold and precious metals as a safe haven through these periods of volatility. So the UK and international markets are no different to the US in that regard.
All right. Certainly seeing those patterns here. Gold a little bit higher this morning, up 1.8% as investors start to nibble again. All right. That's Richard Flynn, Managing Director, Charles Schwab UK. Richard, thank you.